You know what? Let's talk about Fibonacci levels first. So, what is Fibonacci levels? So, are you guys familiar with the Fibonacci sequence? So,
Yeah.
what that is, who said yeah?
Me.
Of course,
I am
genius.
familiar with her.
Yeah, because I told you. But yeah. So the Fibonacci sequence, it's a mathematical equation that you can see everywhere. Everything in nature grows by the sequence. When you see the way the roses grow, the way the rings around a tree trunk grows, everything grows. Even the level of attractiveness that people have, they're the closer they are to it, the more handsome they are, or the more cute you'll find the girl. So, for example, um, a woman's hip to waist ratio, you will find that the more closer her hip to waist ratio is to this golden ratio, which is 1.618, that's the Fibonacci golden ratio, the more attractive you'll find her. And all it is like the hips divided by the waist. So you'll get that hourglass shape, which is why every woman that does cosmetic surgery, that's what they're doing. They're improving their ratio, the hip to waist ratio, in order to make it closer to 1.618. So why is this important? Like, is because stocks move that way too. So we're gonna see real quick about the Fibonacci sequence. So what the sequence uh, notes is that the sum of the previous two numbers equals the next number, and it'll go on like that forever. So 1 plus 1 equals 2, 1 plus 2 will equal 3, 2 plus 3 will equal 5, 3 plus 5 will equal 8, and so on and so forth. That pattern will go on forever. Okay? And like I said, everything in nature grows that way. When you look at a person, even a person's face follows the Fibonacci sequence. Everything follows it, stocks included. And we'll see how. So if we go to our drawing tab, our drawing tools, we're going to use the Fibonacci retracement tool. That's this tool over here. And what we do is we take the high of the impulse and the low of the impulse, and it'll mark key levels for us. Look at that. Look at that. Look at this over here. Look how it bounced off this level. Look at how it bounced over here.
That's wild.
Look at this level over here. Look how it bounced off this level. Unbelievable, right?
That's crazy, bro.
So what we do is, so first thing I look at a chart, I go to the weekly, and you know what? We can even do it on the weekly. Let's remove it. So we could do the Fibonacci retracement off the top of this impulse to the bottom. Look at that. Look at this level over here. Look at this level over here.
Interesting.
And let's switch to the daily, see what happens. Look at this level over here. See that? Look at this candlestick, how it comes up to this level. Look at this level over here. Stock uses this level as resistance in this area. It has a hard time breaking it. Goes down, bounces off the 50s for support, goes up, breaks through this level. And once it breaks through the level, a lot of time it retraces. So it breaks through this level, and what retracement means, it'll go back down to that level to test it. And we see that in this case right here, boom. These candlesticks come to test that level again, bounce off that level, go up. Unbelievable, right? Crazy. Fibonacci retracement. So what you do on the Fibonacci retracement is you take the last big impulse, which is this over here. You go from high of the impulse to low of the impulse, and it'll show you key levels.
No.
Okay? So that's Fibonacci retracement, and that's why it's important. Let's zoom in action. See that? See that over here? So we covered Fibonacci retracement. We covered support and resistance. What else?
It's time for a break.